Good morning, options traders. Steve Ganz here, and I want to share an options trade with you. Now, this is somewhat of a theoretical trade, and what I mean by that is that I'm making this in paper, and it's going to be surrounding a large event coming up, which is our election. So let me show you my premise and how I'm going to lay this out, and then we'll see how it plays out. This is kind of a learning experience. So my premise is that with the election coming up in a couple of weeks, that volatility is likely to rise going into that election, and that depending on how the election goes, nothing to do with any political statements, but depending on how the election goes, whether it goes smooth, whether it doesn't go smooth, whether one person wins, another person wins, I think the market has the potential to have a very sizable move after that election. So if that is my opinion, and I want to come in and consider building a trade around that, I might come in and say, well, I think the market is going to be directional, although I'm not really sure which direction it might go. And then I can look at different trades that might benefit from that. So it's really going to boil down to a straddle or a strangle. Now, a strangle is slightly different in that the two long options we buy would be slightly separated, where the straddle, the two long calls we buy, would be right at the money. Now, I'm going to do this in the SPY, again, just for experimental purposes. I'm looking at maybe this trade because I really don't know a direction on the market, so I'm going to go with what I'll call the tightest point of inflection here, meaning that I'm buying essentially an at-the-money put and an at-the-money call. Now, my risk in this is the amount that I'm spending on it, and I want to come out and I want to come a little bit after the election because, again, it could be a topsy-turvy time for maybe a few days, maybe even a few weeks if this ends up being like the election years ago between Bush and Gore, where it took forever to sort things out. So anyhow, during that period of time, volatility goes up. So if I were to want to come in and buy this straddle, I'd buy both of these at 583. Let me just go ahead and save this trade. And I'm going to call this Election Straddle. And we'll make this part of the start to finish series. So I'm going to save that trade. I will copy this link. I'll share it in the description down below. But now I want you to see what happens here. So as we go forward in this trade, if I am correct and volatility goes up, this trade can even remain in the same general range it is right now. And if volatility goes up a little bit, this can be a profitable trade. But what I'm really looking for is if our market sells off hard, and let me just zoom this out a little bit, if our market were to sell off hard and the SPY were to drop, say, 10%, that would be about 50 points. That would be down here in the 530 range or so. That could be significant. A run up could be equally significant. And the run down, if that were to happen, is also going to happen with an increase in volatility. So basically, those are the ways that this trade can make money. Now, how would this trade lose money? And again, it could lose as much as the roughly $2,000 here if our market stayed right in this range, right around this 583, 585 range, and volatility dropped out, smooth election, clear winner, and the market stays right where it is, volatility will drop out. And the other possibility here is just time decays out from under us without volatility increasing. So those are the ways that this could potentially lose money. But I want to go ahead and put this on. We don't get an opportunity too often to study major known events. Many times unknown events will hit us. A COVID or, who knows what else, a World Trade Center, things like that. but we don't often get a chance to study known events. So this is a good opportunity to do this. And this is one of the ways that I'm going to do it, is put on this paper trade and then study how the market works and how volatility works around this. So that's it for right now, everyone. Take care.